This is an uncovered Japan company research report on Chugai Ro, ticker 1964. Chugai Ro is Japan's leading specialist in industrial furnaces, the custom thermal systems that heat, melt, sinter, coat, and treat materials for steel, automotive components, batteries, and semiconductors. The investment question is whether its lead in cleaner industrial heat can turn into durable growth, while its low valuation and high dividends support the shares in the meantime. At the report reference date, Chugai Ro traded at 11.6 times recurring forward earnings and 0.93 times book value, with a 4.5% dividend yield. It also carried a 37.7 billion yen order backlog, roughly a year of sales. Those figures make the shares look inexpensive, but the discount has reasons. Recurring return on equity is around 8%, liquidity is thin, and the decarbonization growth option has not yet been proven in revenue. A Chugai Ro furnace is not a generic oven. It is a custom thermal system designed around a customer's material, throughput, and process. The company has developed more than 100 furnace types across 14 core heat technologies, serving steel, automotive components, battery materials, semiconductor materials, and air purification equipment. That breadth earned it the domestic nickname, the department store of furnaces. It also gives the company a practical route into new applications rather than reliance on a single end market. The segment mix shows where the economics sit. Plant engineering generated 13.8 billion yen of sales at a 12.1% operating margin and held 22.1 billion yen of backlog, making it the profit engine. Heat treatment was larger at 18.3 billion yen of sales and more diversified across automotive, batteries, and semiconductors, though its margin was 7.7%. The development segment is deliberately loss-making as it funds future hydrogen, ammonia, coating, and drying opportunities. Overseas subsidiaries add sales, but very little profit. The operating profit line tells the cleaner story. It rose from 1.26 billion yen in fiscal 2022 to 2.88 billion yen in fiscal 2026, while operating margin reached a 15-year high of 7.7%. Reported net income jumped to 4.67 billion yen in fiscal 2026. But that was inflated by a 3.32 billion yen extraordinary gain on the sale of policy shareholdings. For valuation, the report therefore anchors on recurring earnings, not the superficially cheap trailing multiple. Chugai Ro is classified as construction because of how it books projects. But economically, it is a capital-light machinery and engineering business. At fiscal 2026 year-end, it had 10.8 billion yen of cash against 4.4 billion yen of interest-bearing debt, for net cash of 6.4 billion yen and an equity ratio of 60.8%. The caution is that the reported 15.7% return on equity was flattered by the one-off share sale gains. Recurring return on equity is nearer 8%, the key measure management needs to improve. Cash flow can look alarming if viewed 1 year at a time. Operating cash flow swung from negative 3.7 billion yen in fiscal 2025 to positive 6.3 billion yen in fiscal 2026. The report attributes this mainly to the timing of receivables and contract assets under percentage of completion accounting. Large projects consume working capital while underway, then release cash when customers pay. With capital expenditure generally below 3% of sales and the balance sheet strengthening, the more useful measure is multi-year cash conversion, rather than any single year. Chugai Ro's moat is not simply a patent or a factory. It is accumulated process knowledge. 14 core technologies applied across more than 100 furnace types. The company keeps high-value design and engineering in-house, while outsourcing fabrication, assembly, and installation to partner firms. That keeps capital expenditure low. It also has an estimated 5,000 to 7,000 furnaces in Japan's installed base, supporting replacement, retrofit, and a potential expansion of recurring maintenance revenue. The weak links are its loss-making development operation and underperforming China and Mexico subsidiaries. The strategic opportunity is decarbonizing industrial heat. Chugai Ro co-developed a general-purpose hydrogen burner with Toyota, developed ammonia monocombustion technology with Osaka University, and delivered a major hydrogen combustion demonstration furnace to Kobe Steel. The company aims to scale carbon-neutral products from 0.87 billion yen in fiscal 2025 toward 10 billion yen by fiscal 2030. That is a large and valuable opportunity, but the nearer 4 billion yen milestone has already slipped. The investment case depends on technology leadership becoming booked revenue. The peer comparison clarifies both the opportunity and the discount. Chugai Ro has the lowest price-to-book ratio and the highest dividend yield among the selected plant and environmental machinery peers. Yet at around 8% recurring return on equity, it is not a standout bargain on earnings relative to every peer. The market appears to be giving little credit for future growth or re-rating until management proves it can lift recurring returns and commercialize the carbon-neutral product pipeline. These scenarios are the report author's illustrations, not price targets or recommendations. The fiscal 2029 bear case is 2,720 yen if margins weaken, backlog falls, and the carbon-neutral ramp slips. The base case is 5,409 yen on moderate earnings growth and a modest re-rating, while the bull case is 8,043 yen if decarbonization products scale. The report also identifies a practical, asset-backed floor nearer 3,650 yen, supported by net cash, the dividend, buybacks, and book value. Investors should watch order backlog, recurring return on equity, overseas profitability, and the next midterm plan. Chugai Ro offers a coherent small-cap research case. A domestic niche leader in industrial furnaces, a capital-light model, net cash, a 4.5% yield, and a valuation below book value. Its potential re-rating rests on two unanswered questions: whether carbon-neutral products become a meaningful revenue engine, and whether recurring return on equity rises from around 8%. The spring 2027 midterm plan is an important checkpoint. Please explore the full free deep dive at Uncovered Japan. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.